Hello everyone, welcome back to a new video. In this video I'm going to be talking about the main issue that plagues most traders, or most normal traders in general. Again, none of this is financial advice, you make your own decisions. This is just what I've observed over time. So, in the hedge fund world, technical analysis, I know most traders, most normal traders use technical analysis. So in the hedge fund world, technical analysis is often looked down upon as it's not clear most of the time. Now, what do I mean by not clear? Imagine you're trying to make a program that's going to trade for you automatically. That's going to check everything on the graph, take all of this information and put it into a trade. Now, for most people, you might be thinking, okay, that's easy, I know how to do this, and the algorithm is going to figure it out perfectly. Now, most of the time that's not actually true. For example, most traders use Head and Shoulders, but you can't actually write down a way to find Head and Shoulders each time. Like, for example, I may think that this, or maybe this, is a Head and Shoulders pattern, right? But somebody else might not. What actually differentiates one Head and Shoulders pattern from another? If you can actually write down what differentiates these two patterns, then okay, you can put it in your algorithm, and then you don't have as big of a problem. The issue is that most traders that use technical analysis actually have this problem. They can't write down their strategy so that it is absolutely clear and that it can be executed 100% of the time with 100% accuracy. I'm not talking about success, but I'm talking about being able to figure out when something is formed and when something isn't formed. Another big issue is, for example, EMA. This is a new graph. Anyways, continuing on. For instance, a lot of strategies have the idea that you should take a trade when there's a bounce from the EMA. How do you determine that bounce, for example? See, there are two bounces here. One passes past the EMA, the other seemingly doesn't, but it almost touches the EMA. So how do you actually tell this algorithm when there's a bounce from the EMA? Now, this is not a problem that most traders don't have. Most traders actually have this problem, and that's the issue with most hedge funds wanting to use technical analysis. Due to this, technical analysis is clearly unreliable. I mean, if you can't tell an algorithm your strategy exactly, then there's no way of actually verifying it. Now, there are other strategies that hedge funds use, for example, like merger arbitrage, which also may seem unclear, but they're much more easily divisible. You can figure out exactly what the strategy is much easier than you can for a strategy where you're looking for a bounce from the EMA or, for example, a bounce from an area of interest. That's why many of the strategies recently that were about bounces from area of interest or EMA, Head and Shoulders, everything like that, and it doesn't only come down to them, it's also other strategies like cup and handle or wedges. That's why most of those strategies have recently been failing, because they're not actually 100%. You can't televise them, or you can't be sure about each one of those strategies because they're not 100%. For example, this channel, for different people, they can see that this is a channel or this isn't a channel. You can't tell an algorithm exactly how you find a channel. That makes it much harder to verify, and obviously that's a big problem that most traders have. So the reason behind this is that most traders don't actually have strategies that are fully dependent on price action. Most traders have strategies with RSI or Bollinger Band, stochastic, but you can't actually tell an algorithm when certain conditions are met, because they're so broad. They're almost non-existent, because it's all dependent on your personal opinion. So if you can make a strategy that's actually price action dependent and that an algorithm can uncover 100% of the time, then you solve one of, if not, your biggest issue in trading. If you can make a strategy that is clearly and easily can clearly and easily be figured out by an algorithm or even a person if they read a document, then you solve your biggest issue, and I guarantee that most likely this strategy will actually work compared to all of the strategies out there right now that use something like head and shoulders or cup and handle that doesn't actually work. Most of these strategies again are failing right now because they're just not real. And all of these institutional traders, as I mentioned before, hedge funds, are taking advantage of this because the people trading like this don't actually know what they're doing. It's fully opinionated. So again, this is what I believe is the biggest issue with normal traders right now. It's the fact that they don't have strategies that, if they wanted them coded out, if they want an algorithm trading with a strategy, they don't actually have strategies that can be made to be traded automatically through a computer. So yeah, thank you for listening to my video. If you have any questions or any videos that you want to see in the future, leave a comment down below, leave a comment on X, and I'll respond there. Thank you for watching and have a good day.